Hello, everyone. My name is Adam Crowell. I'm President and General Counsel of ComplyNet, and we welcome you to our Coverage Coffee Break, which is a webinar series that we have been holding monthly with Dealer Risk Services. And this is our 8th installment. And today we are going to be discussing professional liability and E&O coverages for dealerships. Just a few housekeeping matters as we're getting started. There is the ability to submit questions. So if you have any questions during the presentation, please feel free to submit those and we'll try to answer those at the end of this presentation. Once again, my name is Adam Corral. I'm President and General Counsel at ComplyNet, and I'm very happy to introduce to you today Steve Gibson. Steve is one of the best dealership brokers when it comes to insurance in the nation. He comes from a great background. He worked at Universal Underwriters, which many of you know later became Zurich. He also worked for Century Insurance, and he is a national speaker. I've actually had the opportunity to meet Steve originally with the National Association of Dealer Counsel, where I am a member, and he's a contributor in numerous industry publications and newsletters. He's a University of Florida graduate. And at the end of this presentation, Steve is going to not just answer your questions, but he's going to also let you know about our next webinar that's going to be coming up on July 22nd. So please stay tuned for that, and we'll go over that information. Steve, thank you very much for joining us today.
Thank you, Adam. I appreciate it. And thank you for the kind introduction. I think when you talk about the number of years that I've been around the automotive industry, that kind of just makes me an old gray-headed guy. So I appreciate it. It's been a lot of fun. We've learned a lot along the way, and there have been a tremendous amount of changes in the industry since I first started. So today we wanted to talk about a subject that is really near and dear to me, and one that is often confused and misunderstood by the people that have not the level of expertise and experience in the automotive industry and the vastness and the different facets that we have in the industry, and that is professional liability. So buried deep inside the garage policy is a set of coverage forms that are considered errors and omissions forms. They are what we call the professional liability portion of the policy. When we think about garage policies, and a lot of people call it garage keepers policies, you know, they cover bodily injury and property damage that are sustained because of negligent acts by the dealer or dealer employees. They also cover the damage to a customer's car while it is in the care, custody, and control of the dealer. And lastly, the work of the dealer, i.e. the products and completed operations, the oil changes, the brake work, et cetera, et cetera. But there are some sleeping nuisances that can erupt from the dealership operation, and they are in the area of what we call professional liability. So professional liability, the purpose of the policy was to provide defense and indemnification for allegations or suits that do not involve any bodily injury or property damage whatsoever, or damage to a customer's car. In addition, they were designed to provide defense coverage for those frivolous lawsuits or allegations that arrive at the dealership doorstep. In other words, you're being sued because you have fraudulently misrepresented the performance of a vehicle, or you've made some error or omission in the F&I office with regard to the paperwork involved. So when we break it down, and again, looking into the garage policy deeply, what you'll find is you'll find a section that deals with truth in leasing violations, the so-called Regulation Z. You'll have a section that deals with odometer and prior damage allegations, you know, how you represent any prior damage to a vehicle to the potential customer, and or exactly what the mileage is. We'll deal with statute and title errors and omissions, and then insurance agents errors and omissions. Now, the insurance agents E&O, not to be confused with selling coverage as a quasi Allstate insurance agent or whatever agency you may have at the dealership. This is very specific, and it actually grew out of the old days, when there was credit life and accident and health, i.e. disability policies that were being sold in the F&I office. So the last bullet point, you need to kind of dig into the coverage specifically because it may not cover what you think it covers. And lastly, the first bullet, which is customer complaint defense. And the CCD coverage is often known by different names depending upon the carrier that's offering it. Oftentimes we see it called operations suits or customer complaint defense. But essentially what it does is it says we will provide you defense coverage and defense only if you have a suit that arises out of the sales transaction and it's not covered anywhere else. So we're going to dig into this a little bit and take a look at it. So let's talk about the potential coverage gaps and what is not covered under the professional liability section and what is covered. So if you think about it very simply, what is not covered under the professional liability section is coverage that is covered somewhere else. So essentially, if the allegation is covered by another policy form, meaning the bodily injury or the property damage or completed operations, you didn't put the plug back in the oil pan after you drained the oil, my motor blew up, or my vehicle was stolen, none of that is going to be covered under the E&O section. This is going to be a very specific section, and really it is going to, again, as I mentioned before, kind of line up with the business dealings that happen in the F&I office. So what are the main areas of concern when we talk about professional liability coverage? Well, the first area of concern is paying attention to the limits, because the carriers have started, and they started this about 7 to 10 years ago. They started diluting the limits that are provided under the professional liability section of the policy. In the old days, the Zurichs, the Federateds, the Centuries, most of the carriers were going to provide you with a full $500,000 in professional liability coverage, and many of them would as well run it into the umbrella, providing you tremendous amount of coverage. As the suits started happening, and is normal for the insurance industry, when they start getting dinged in a certain area, then they start diluting or depleting the coverage. So what we have is we have underlying limits that have been reduced dramatically. One of the things that you need to pay attention to is your underlying limit, and also pay attention to where does the defense lie. Does defense erode the limit, or is defense in addition to the limit? This is very important, because if we have class action litigation or something that gets to be heavy and we have to hire some high-powered lawyers to defend us, is their fee going to erode the amount of coverage that we have, or is their fee going to essentially be unlimited and the coverage be applicable only to the indemnification? Nextly, we need to see if it will run into the umbrella. I will bet you a dime to a dollar that 95% of the coverage forms that you have out there with your dealership do not run into the umbrella coverage. So that brings us to the point of class action litigation, and which is really, I think, the main concern from the aspect of truth in lending, truth in leasing, odometer and prior damage, etc. Because let's say if you misrepresent the odometer or any prior damage on a vehicle, you will most probably get sued, and you will be guided by the statutes as to what that suit can be. It may be treble damages. It may be 3 times the value of the vehicle. That's still something that you can handle, and it's probably even still something that can be handled with a $100,000 or a $300,000 or a $500,000 odometer and prior damage limit. However, if you have multiple claimants that get together in some sort of class action litigation and sue you as a class, the numbers multiply exponentially, and they can get huge. And the reason that I bring this up, and we'll talk about it in a few minutes, and Adam will chime in with his expertise, is when we talk about things arising out of the F&I office, if you are not disclosing properly and you're selling 200 vehicles a month, then you have not disclosed properly times 200 vehicles for that month times 12 months equals a whole lot of potential litigants. So if you get caught in some type of class action litigation, you need to have some very strong limits. The next area can be potentially credit discrimination allegations. So, this is an area that is most probably not going to be covered by the typical garage policy. The agent may try to push back and say, well, that's going to be covered under the EPLI section under third party. But this is something that you need to be absolutely sure of. And as we know, in our world today, it seems like everyone is a protected class. My wife, I always say, is a triple protected class. She's over 50. I won't tell you how old. She's a female and she's Hispanic. So she is very protected, and anyone that falls into any of those protected classes can easily sue a dealership for discrimination. You charge someone less interest rate than you did me, and it's something that can get very, very expensive. As you know, any lawsuit is expensive just to respond and just to fight it. And lastly, any type of federal agency intervention. We have something out there in our world called the CFPB, which is the Consumer Finance Protection Bureau, which arose out of the Dodd-Frank litigation, Dodd-Frank statutes, legislation, if you will. And you may remember that from 2009, passed by President Obama in 2010. And basically, it was arising out of the recession, and it was aimed toward the protection of consumers. Well, when you fast forward that, what happened is it sent the feds into a high level of scrutiny over the auto dealerships because of our indirect lending practices. So we aren't typically lenders, but we facilitate the loan much like a mortgage broker, and therefore we fall under the scrutiny of CFPB. Folks, what I always say is any organization that represents themselves with acronyms is problematic, whether it's OSHA, whether it's EPA, whether it's the IRS, or in this case, whether it's the CFPB. When the feds show up, it's an area that you need to be concerned with, and it can be truly problematic. So we're going to talk about risk mitigation for just a second and how to control claims. And I'm going to turn this back over to Adam, because I think that the gist of it is that we need to know what's going on in the F&I office, and that we need to standardize it, and that we need to police it. And Adam, I'll let you take over from here.
Oh, well, thank you, Steve. So one of the things that is absolutely necessary when it comes to risk mitigation is making sure that you have the right forms and procedures. In particular, with the forms, making sure that these forms are coming from a reputable source. From the franchise level, generally speaking, you're going to be receiving those from reputable sources, but there is the need to ultimately look through and make sure that everything's in there the right way and that documents aren't being introduced, because as Steve mentioned, it just takes doing one wrong thing across 200 cars that are being sold a month over 6 month, year period, 2 year period, whatever, and you have this big class action that's out there. So lots of the state associations are producing forms to keep you compliant. You have the Reynolds and Reynolds out there that is also producing forms that are very state specific, and it's very important that you know that what may be a good form in one state may not be a good form in another state. Sometimes there are the state rules, and what you're generally hearing about on the federal level from the FTC and from the CFPB, they'll generally refer to these types of practices as unfair, deceptive acts and practices, or unfair, deceptive, and abusive acts and practices. And on the state level, they might be referred to as consumer Sales Practices Act violation or Deceptive Trade Practice Act violations, but they're all kind of from the same genesis. And sometimes violations of a federal rule can be the basis for a state claim, and that could be the basis potentially for a class action. So it's very important that you make sure that you have the right forms and procedures in place, and understanding that there is the need to make sure that there's compliance in the F&I office, because it can be very, very costly. And one of the things that is worth mentioning is there should also be trying to make a determination of whether or not there's potentially things like arbitration provisions in your deal jackets. Has your dealership adopted arbitration policies? And are they valid arbitration policies? Because there could be potentially a very big benefit when it comes to the arbitration policies, because the courts have found, generally speaking, that you can maybe require the person to arbitrate on an individual basis as opposed to a class-wide basis. And that could be important, because let's say that someone has a claim that is the same as many other people that could have that same claim. Well, instead of taking them all and grouping them all together, have them bring the claim in arbitration and bring it on an individual basis as opposed to a class-wide basis. The other thing that you have to keep in mind is it's not just about the forms. Anytime that you have a salesperson, not just an F&I person, but even just a salesperson that is talking to someone about a vehicle, chances are, under some sort of state or federal rule or statute, it is going to be an advertisement. And Steve mentioned Regulation Z. Regulation M is another one. So Regulation Z applies to sales, Regulation M applies to leases. But there are certain terms that are what they call triggering terms. And once you start talking about those triggering terms, there are certain disclosures that have to be made to the consumer at that point. So for example, if you have a salesperson that says, hey, I'd like to get you into this car for $300 a month, how does that sound? That sounds great. Okay, well, they now need to take it a step further, and they need to start giving some other valuable information, such as what would the payment term be? Is this a 60-month payment term? Is it 72? Is it 84? What's the interest rate? Is this with approved credit? Are there any taxes, title, doc fees, anything else that goes along with that? This is all information that may need to be disclosed during the process. And not just your F&I people have to be aware of this, but your salespeople need to be aware of this. And there are different agencies out there that will provide certifications to people in the finance department and even in the sales department. For example, the Association of Finance and Insurance Professionals, AFIP, they commonly certify through kind of a boot camp process the F&I people to make sure that they know how to do their job the right way and make sure that they're staying compliant. And it's very important that throughout that process, not just getting a certification, but making sure that you're continuously educating your employees and that you're inspecting what you're expecting. So making sure that you're going through the process of continuously auditing deals and deal jackets and making sure that they are remaining compliant, and that if there are issues, that you're taking action to remediate those. And that could be important for proactively stopping a bad situation from occurring, but it could also be helpful for you later on down the road in trying to prove a bona fide error defense. And where that is important is that with most of these consumer protection statutes, if you can prove that it was a bona fide error, then in those situations, the consumer is generally limited to their actual damages, which lots of times are not that much money. But if it's not a bona fide error of defense and they can prove that there was some sort of unfair, deceptive, abusive act or practice, then in that situation, the consumer might be entitled to things like statutory damages and attorney's fees. And keep in mind, if you're talking about maybe 2, 3, 4 years worth of litigation, those attorney's fees add up very, very quickly. And there could be a lot of liability to the dealership. And as a final matter, and just touching on something that Steve had mentioned earlier, I've seen it quite commonly where dealerships have thought that they had coverages for those types of claims, only to find out that they didn't. Sometimes there are special endorsements that are needed when it comes to these Consumer Sales Practices Act claims or these unfair, deceptive, abusive acts and practices. Steve mentioned it before about the misrepresentation. It's basically those types of claims. So make sure that you're working with a broker that's going to make sure that you have those types of coverages in place should those types of lawsuits be brought against the dealership.
Thank you, Adam. And I think not just only your broker, because brokers are salespeople and they are trying to push their product, but I think a good review from your counsel to look at the forms and dissect the forms. Every insurance form, whether it's the garage form or any type of policy section inside it, will have an insuring agreement. And then it'll have definitions. And the insuring agreement says, if this happens, then we will do this. It's really fairly simplistic when you break it down. And this is always well defined in the definitions. And then there's a set of exclusions. I think if you go back and you review the professional section of your policy, you might be surprised to find out what it covers and what it doesn't cover. Normally, the truth in lending, truth in leasing talks about violation of a state or federal statute. So that's where we can oftentimes get into allegations, and an insurance policy will respond and or, as we call, trigger based on lining up with the allegations. And if the allegations don't specifically mirror what's covered in the policy, then unfortunately there's not any coverage. There are some policies out there in the marketplace that you can get and secure that have a broader trigger that might provide you with more coverage in the situation of, God forbid, you have the once in a lifetime class action litigation suit that's going to continue, as Adam alluded to, for 3 or 4 years and pile up tremendous amount of attorney fees and potential damages. So understand the claims, understand where the market is. The garage market is always changing. If you understand what's going on at your dealership through doing inspections and F&I deal jacket audits, as Adam alluded to, it will help you get a better handle on it. And then look to the insurance industry for options. Push beyond the garage package policy and find out what else is out there that might potentially plug some holes that are in the garage policy. All right. So any questions that you have, please feel free to send them over. Our next coffee break series is going to be on a very unusual subject. Sadly, we have to bring up a topic like this, but the next coffee break series is going to be on active shooter, or also known as active assailant. The unfortunate situation where we have an individual or a group of individuals that show up at the dealership or a location with a proximity to the dealership and start causing bodily harm and disruption to the dealership. It's a very unusual situation. We hope that it never happens, but unfortunately, we've seen it happen so many times in the news There have been products created, particularly from London, that will respond to this, and you just need to be aware of it. And again, folks, part of the message is always to look outside the standard garage policy to find some of those nuances and situations that are not covered under the standard garage policy, but where there is coverage available to you. And lastly, before we leave, and we appreciate the attendance of all, we have a winner of the gift card that we like to give away at the Coffee Break series, and it is Sarah George. Sarah, we congratulate you, and Alicia Crabtree from our office will be in contact with you and send you the gift card with our thanks for attending. So Adam, if there's nothing else from you, I think we're signing off from here.
I have nothing else, and everyone, thank you very much. July 22nd will be that next webinar. And for anyone who would like copies of the slides of this presentation, please reach out to myself or Steve. We'll be more than happy to provide those to you. Everyone, thank you very much for attending today.
Thank you so much.